The International Monetary Fund (IMF) announced on Wednesday that it had reached a staff-level agreement (SLA) with Pakistan, a major breakthrough that will allow Islamabad to access $1.2 billion once the fund's executive board gives its formal approval. If approved, Pakistan will receive $1 billion under the Extended Fund Facility (EFF) and another $200 million under the Resilience and Sustainability Facility (RSF). This brings the country's total disbursements under the two arrangements to around $3.3 billion, a significant boost for Pakistan's struggling economy. The announcement comes after a tense few weeks of discussions between IMF officials and the Pakistani government. The IMF mission, led by Petrova, had concluded talks in Islamabad last week regarding the second review of the EFF, initially agreed upon in 2024 to stabilize Pakistan's economy following a severe financial crisis, and the first review of the RSF climate loan. A day before the official announcement, Finance Minister Mohammad Aurangzeb, who is currently in Washington, expressed optimism, saying he hoped the deal would be reached this week. In a statement issued early Wednesday, Petrova confirmed that the SLA had been reached but emphasized that it still required formal approval. Supported by the EFF, Pakistan's economic program is entrenching macroeconomic stability and rebuilding market confidence. The recovery remains on track, with the FY25 current account recording a surplus, the first in 14 years, the fiscal primary balance surpassing the program target, inflation remaining contained, external buffers strengthening, and financial conditions improving as sovereign spreads have narrowed significantly. However, the IMF official also acknowledged that recent floods had dampened Pakistan's outlook, saying, "The floods underscore Pakistan's high vulnerability to natural disasters and substantial climate-related risks, and the continuing need to build climate resilience." The fund wants to express its sympathy to those affected by the recent floods and is grateful to the Pakistani authorities, private sector, and development partners for many fruitful discussions and their hospitality throughout this mission. Addressing inflation risks, Petrova said that while the floods could temporarily push up prices, the State Bank of Pakistan (SBP) was prepared to act if inflationary pressures rose. While the floods are likely to have a temporary impact on prices, the SBP stands ready to adjust its policy stance should price pressures intensify or inflation expectations become unanchored. While the sustained buildup of international reserves is welcome, further steps are needed to deepen the foreign exchange market to facilitate transactions, support price discovery, and cushion external shocks.